I want to say, though, it's kind of like a woman who gets pregnant. The pain at the end is excruciating, right? And it's quickly forgotten. And 2 weeks later, it's like, this is awesome. I think maybe that's not a good analogy. Kevin's looking at me like, what on earth? But I mean, we were scared at different points of the process. We got scared, right? It was challenging. We didn't know all kinds of things that we probably should have known, but we did it. And I think that's the key to success for anybody in this business is just do the process. It was painful. It was scary. And the moment that we closed and we got the acquisition fee and we said, we're owners, we were like, let's do another one.
This is episode number 20 of the Multifamily Success Stories podcast. Would you like to turn vacant units into cash and earn up to 3 times more per door without having to do any extra work yourself? We offer fully managed short-term rental solutions for multifamily investors. Go to managedbylux.com for more information.
Hey, this is John Bell
And Julian Sage.
and welcome to the Multifamily Success Stories podcast. This is a show where we talk to multifamily investors about their journeys and starting and growing their real estate empires.
Our goal is that you'll be able to walk away not only inspired, but with practical information to help you in your real estate journey.
Since we are a new show, please go over to iTunes and leave us a review and let us know what you enjoy.
And if you haven't done so already, go on over to our Facebook group, the Multifamily Success Network, to connect with the community. Hey, what is going on, Dealmakers? Julian Sage here, and in this episode, I had the special honor of speaking with Kevin Romney and Mike Ballard from Camino Verde Group, a multifamily investment company that started back in February of 2019 and has since acquired 100 apartment units and 270 under contract. In this episode, Mike and Kevin share their experience starting in the multifamily space with no prior experience. Mike and Kevin also share their experiences from coming from a group of around 40 students who attended a multifamily boot camp, that they were really only among the few people who have actually been able to grow their business. So they share their experience and the reasons that they believe that help them stand out amongst the rest. If you like my show notes for this episode, go to multifsuccess.com/EP20, or if you'd like my show notes sent directly to your inbox every week, then go to multifsuccess.com/show notes. With all that being said, on to this week's conversation. Hey, welcome back, Dealmakers, to another episode of Multifamily Success Stories. In this episode, we have the special honor of speaking with Kevin and Mike from Camino Verde Group. Kevin and Mike, if you wouldn't mind introducing yourself to the Dealmaker community, let them know who you are and what inspired you to get into multifamily investing.
Great. Mike, you go first.
Yes, sir. So I'm a partner in an accounting firm called Ascent Multifamily Accounting. And I've been working with multifamily owners and managers for about 5 years. And I've just been watching what they've done and how they've grown. We've had some big clients like Lennar Multifamily. When they got in the multifamily business, we were involved in helping them get started and setting up their whole back office. We've also worked with large players in Dallas, Philadelphia, DC, Los Angeles. And so I watched them, but then we started picking up some smaller clients and I saw how they would buy one property and then buy, another one. And, they grew their wealth and their income in great ways. And after about 3 years, I started kind of forming my mental plan that I'm going to do that too. And so we bought our first property. Kevin and I partnered. He'll tell you how we got together as partners. But we bought our first property in July of last year. And so a little over a year and a half since we purchased our first property, and we're now over 350 units.
Amazing. Awesome.
So my background, Mike and I first crossed paths in college, studying at Brigham Young University. And it was probably about 6 years ago, maybe a little more, 7 years, that my son asked his daughter to prom. And that's how we became reconnected. My experience is kind of, I graduated in accounting, worked for Ernst & Whinney for a few years, but really wanted to do my own thing and own my own business. So I've been an entrepreneur and have had businesses in the call center business, and then just most recently, a renewable energy business. And I was consulting, Mike's a good friend. We were at breakfast one day and and he always gives good advice. And I was asking Mike, what am I going to do if I sell this company? And he said, as he just mentioned, he's a partner in Ascent Multifamily Accounting, and he says, let's get in the multifamily business. I see all these folks, and they get involved, and they grow and grow, and they do very well financially. Let's get into that industry. So we decided to do that. We formed Camino Verde Group in February of 2019, not quite 2 years ago. And since then, we've purchased 3 smaller communities here in Las Vegas, one with 36 units, another with 36 units, another with 28 units, so 100 units total. And then just a week ago, we closed on 258 units in Kentucky. So as Mike said, we're up to 358 doors. We have another 142 units under contract that we hope to close between now and the end of the year or thereabouts. So by the time we've been in business 2 years, our hope is that we'll have 500 doors under management.
That's awesome. Awesome. I want to go back to, you said you guys met in college. Was that, were you guys like friends, or did you just end up like going to the same college? Like how did that work?
We barely knew each other. I just recognized him. I think we had one class together maybe, but we really didn't work together in that class. But after he graduated, he went to work in Dallas, and came back home to Vegas, which is my hometown. And I don't know, about 17 years ago, Kevin, you moved back to Vegas.
Right.
And so that, I knew that he was in Henderson. We crossed paths. We have a mutual friend, but we really didn't start talking that much until 5 or 6 years ago.
When your kids ended up going to prom together, and so the dads got together, and then you're like, hey, what do you do? And some type of chemistry came up.
Yeah,
that's right.
His business partner was in his prior business was also a close friend, and got me involved in doing some consulting for their business at the time as well. And so
my son married somebody else, but the 2 dads became business partners. So
okay, who asked who out to the lunch?
It was to the lunch. That was I think I called up I think I called you up and asked you, let's go have breakfast together.
Yeah.
So yeah.
All right, nice. So you guys, so Kevin, you said that you had some experience in real estate. Mike, you were working in Ascent Multifamily Accounting, so you're both kind of in the space, but not heavily invested. You guys kind of had your own businesses. What inspired to actually start, to leave or to, change your career path, so to speak, and to go into investing as GPs?
They say that luck is where opportunity meets preparation. And I think we were lucky. I had been in my mind, I started laying out groundwork to be in the multifamily ownership business. Having been a consultant to the industry, having worked with management companies or ownership groups, anywhere from, I had a client with 30 units in Austin, Texas, to a client with 7,000 units, and Lennar, another big company, So I'd just seen how folks had done it. And a lot of them basically said, I got into it 6 years ago. I got into it 4 years ago. And I'm like, that's not that long ago. And I said, how did you do it? As I would travel to different conferences, we sponsor multifamily conferences all over the country in major cities. I'd take clients in that market or other clients that were in that conference to dinner. And I'd say, how did you go from, working for somebody else doing this to having, 1,500 units? And they would tell me kind of step by step, it was this, and then it was this. I went to this workshop. I read this book. I did this. And I said, I can do that, and while they're smart, I think I'm kind of just as smart. I can do that. And so that had been going in my mind. And then Kevin said he's about to sell a business and was looking for something to do. And so my preparation and his opportunity kind of connected. I said, what would you think about this? And Kevin can tell his side of the story, but, we said, let's go to a workshop together. There's one coming up in the next month. I even documented, I think we went to breakfast on January 9th of last year. Yeah. And we went to a workshop in mid to late February, right after President's Day, right in February. And it was a free evening workshop where they sold a 3-day training course. And, I went to the free workshop one day. He went to the free workshop the next day. And then we said, you want to pay the $1,500 to go to this 3-day workshop? And he said, sure, let's do it. And we went to the workshop, met another gentleman who's become our partner. And, we've just kind of grown the business.
So you guys have, spent years, building up these skill sets, both entrepreneurs, both successful in your own ways, in your own companies. Why try to change things after, having built up success, in different industries or different verticals? Why jump in now into this? Why not continue to build up something else, where you've been investing all your time?
I think Kevin and I are both serial entrepreneurs. Go ahead, Kevin.
So for me, I had been in the call center business, so I'd done some build outs on call centers. But one of the very best investments I'd ever made was a commercial building in the Dallas area where I lived. And it just, when I sold that property, the amount of money that I made from appreciation just really opened my eyes. And then another thing is you build a business and you sell it, your income, yes, you get some money from the sale, but your income goes away. With real estate, this is income that continues on and on, that you can get through asset management fees and through appreciation. And just the whole model and the real estate model just intrigued me. I had always wanted to get deeper involved in real estate, and when this opportunity came along, I said, yeah, this is the right thing. Let's do it.
What has been the most challenging part of starting this multifamily business?
I would say there are multiple things that are challenging. One is meeting the right people, and one of the great blessings that we've had with our company is a lot of Mike's connections and contacts. We've been able to hit the ground running with great people that we've brought on board to be part of our GP group, sponsors, mentors. We've had some wonderful mentors that have given us good counsel, good guidance. And so that's just been a really blessing for us in growing this business. The other difficult thing is just the fundraising, and we find that if you find a good deal, and if you just keep talking to enough people and going out there and turning over stones and looking for the right folks, you'll find them, and you'll be able to raise the money to be able to get the deals closed. So those are some challenges, but we've been able to overcome those from good, like Mike said, good preparation, good contacts, and a little bit of great luck as well.
So, one of those things, Mike, that, you saw other people that you were managing, managing their finances, and you saw that these people, they were just picking up these units. They had 600 or 7,000, and so you thought, I can do this myself. Did you, going into it, was it because of that event that you knew maybe everything that entailed this business? Did you maybe look at what they were doing and think that it was easier, and then having actually done multiple deals yourself, realize that maybe it's not as easy as people make it seem?
In some ways it's harder, and in some ways it's easier. The thing that I told Kevin about 9 months into this, about 9 months ago, actually, we've been in it about 18 months, is I said, Kevin, I was surprised at how much I didn't know that I didn't know, right? I thought doing the back office accounting, I knew so much about, the budgets, the financials, processing payroll, and buying the properties and that type of thing. But there's so many other little details. Everybody goes, not everybody, but most people go to a workshop, right? There's the Joe Fairless workshop or the Ari Mentor workshop, or, a dozen other workshops you can go to. You buy the books, you listen to the podcasts and the audio tapes, and you don't really learn until you get in there and do it, and we look at that, and everybody said, oh, you got to look at the existing cap rate that you're buying it at. You got to look at the cash on cash return, and you got to look at your IRR. And, we started to see some of those people would tell you the perfect scenario. I mean, we probably went through looking at 100 deals, and none of the perfect scenarios existed in this market. But I looked at it and I said, the more we think about it, and Kevin and I had this discussion, what we care about is, what can it really be worth? Can it cash flow? Can we pay the pref? Who cares what somebody else bought? I had worked on a deal on the accounting side with a guy who bought a property, and I did research. I helped him do some research on the property, where the property was purchased for $13.8 million. And it was just before Kevin and I had this breakfast meeting, and it was so instructive to me what I learned from this experience. The client bought this property for $13.8 million. Not the client, but the guy the seller bought the property for $13.8 million, and he sold it to our client for $18.5 million less than 2 years later. He had put $2 million into the property, mostly totally renovated the clubhouse and the exteriors, but only improved 6 units. So our client bought it for $18.5 million. So the first guy made bank, right? He made almost 2.5 times his money. So now my client bought it, and I saw his pro formas and everything. And his goal, he thought he could get about an 18 to 21% return and sell it maybe at $25 million in 7 years. So they started renovating all the rest of the units, putting about $6,000 per unit into them, and did a few things on the outside, but almost no expense on the outside because a lot of it was already done. And a broker came to them, called me and said, "Hey, can you introduce me to them? I've got somebody that wants to buy their property." And I said, "Well, he doesn't have it for sale, and he promised he'd give this one broker the right to sell it." And he says, just make an introduction. I'll make him an offer he can't refuse. And lo and behold, they did. And they sold the property for $30.5 million, 2.5 years into it on their 5-year plan. And they were like, our investors couldn't believe it, right? But it's not, even though somebody made a great profit before you, doesn't mean you can't make a great profit, right? So one of the properties that we bought, we looked at it, and the guy had just bought it 6 months earlier, but it met all of our criteria, our new criteria of, can we get a good IRR? Can we get a good cash and cash return? And can we pay the, we had some other criteria that I don't necessarily want to get into, but it met our criteria. But the guy had just bought this property for $2 million 5 months earlier, and he wouldn't sell it for less than 2.7. And it worked in our scenario at 2.7. So we raised, $860,000, I think, to buy this property at 2.7 million. It was 36 units, about $75,000 a unit. And we start doing what we're doing. And 6 months later, maybe 8 months later, we get an offer for 3.4 million. We turn it down, saying we want 3.8 million. They said 3.5. We said 3.6. And they said no. And we then they came back to us at 3.55. And we said yes. So here we are. We bought a property last October 28th. We're going to close probably on December 31st for, I think it's 3.564 now, right? Is what we're going to sell it for?
3.564. Mm-hmm.
3.564. We had 860,000 into it, which on top of the 2.7, we had another 300,000 in costs for improvements and what we were doing to it. So we're into it 3 million even. We're going to make 560,000 profit on an 860,000 investment. That's a great return for 1 year.
Now, how for people that are listening to this that are thinking, how can someone, or why would anybody, if someone is able to increase the value of the property and then somebody else is purchasing it, like in that example where someone, ended up purchasing that property for over 30 million. You know, that person that's buying that, what is the mindset of a person that's, you know, purchasing that, you know, while the renovations are still going on after you've, you know, that person was already trying to raise the value in that property?
You know, everybody has different goals, right? Some people are buy and hold for 15 years. Some people are buy and sell in 2. Everybody's different. I think, you know, the guy who ultimately bought it was a buy and hold in markets I like and hold it for 15 years. And because of how he gets his money, he was happy to get a 6% IRR or 6% cash on cash return. And he was willing to do that. Where the group in the middle, they were flippers. They always planned to list it in the 4th year and sell it by the 5th year. So you just got to look if the economics work. And I think having a model, there's lots of models out there, but almost everybody I talk to buys somebody else's model, maybe 2, finds the things they like, and then they create their own financial analysis model and underwriting model. And that's what we've done now, where we bought probably 2 different groups as models, found what we like, and kind of, you know, merged, you know, took this general ideas and kind of built our own spreadsheet from scratch.
So when you're saying, you know, you're taking 2 other people's models, so you know, there's educators in the space, like that first boot camp workshop that you went to, and they had a model for how they, you know, try to find and underwrite deals, and then you looked at that, and then you just ran with it, or you said, hey, I should really maybe look at another person's model, see how they do it, and that's how you came up with where you are today.
So we've run with about 3 different models from 3 different companies, but in the end, none of them do everything that we want it to do. So we've kind of created and are still in the process of creating our own model that gives us exactly the numbers that we're looking for and in the type presentation that we want it to come into. So that's kind of the way it's been for us.
And how does that, you know, how rigid or how defined are these models when, you know, deals, you know, when you acquire the property, you know, things might be able to, you know, things might come up. Do these models that you create automatically kind of, you know, account for all of the, you know, possibilities?
So one of the things that we always do when we purchase a property is we always want to make sure we have sufficient cash reserves on hand to handle any bumps in the road, any challenges that come up. So we always make sure that we have at least 3 months of expenses on hand to be able to cover us in case, you know, again, we hit those bumps in the road. We're delighted. We're so glad that we did that, because this latest big bump in the road, it's starting in March with COVID. You know, all of our properties, we've been able to do very well because we had reserves on hand to be able to carry us through, and still carry us through till we can get things running smoothly again as they were pre-COVID. So it's just, you know, you set the parameters, and that's one of our requirements, is that if we're going to do a deal, the IRR and the return has to look good enough, allowing us to have at least 3 months of expenses in the bank to be able to cover us.
So, you know, after you go to these workshops, you kind of understand, you know, how people, and you had no prior, you know, you had a little bit of real estate experience, but, you know, nothing that was practical. So you go to these workshops, and then at that point, you just feel confident enough to be able to go out and pick up your first deal. You said you went in around, was it January to the workshop, and then by February you formed the company?
So January was our breakfast. We went to the workshop in February, started our company, and purchased our first property by the end of July. So yes, you learn, but you also have to take a leap of faith. It is a bit nerve-wracking to go out there and purchase your first property. It's nerve-wracking to purchase your 4th or 5th or 6th property at times. But if your fundamentals are right, if you've done your underwriting correctly, then you know the numbers are going to come together. And if you've got a good deal, you know you're going to be able to raise the money to get it closed.
Yeah.
And so that's what we've done.
One of the things I would say is ignorance is bliss, right? because you don't know what you don't know. We just went out in faith. We looked at lots of properties, ran them through a quick little one page analysis. You're looking for kind of some of the same things. What are market rents, and can you bump them? What kind of cost is it going to take to bump the rents and improving the units or the exterior, right? And then what will be your ultimate sale price? And then that determines your internal rate of return based on, how well you can manage it, and every market has a certain number for kind of what the typical expenses are per unit. And, over time, anybody can build their own model. You can even do it on the back of a napkin or the back of an envelope. But it's, people will build whatever models they like. But, you got to go in faith. You just got to, we set goals. We're going to meet this many brokers, per month for the next 3 months. We're going to try and review this many deals per month for the next 3 months. We're going to send, out of those 100 deals, we're going to try to send 10 letters of intent, right? Or offers, make offers on 10 of them, and try and get best and final in 3 and buy 1, and we just did that. And again, we didn't know what we didn't know. And we just went forth in faith and just double checked numbers and basically looked at each other. Are we sure we want to do this? This is, we're taking out a $2.2 million loan here, and then we find out the lenders basically say, neither of you two have enough experience. Go find somebody with a lot more experience before we'll loan you the money. So we had to pay a guy, a percentage of our sweat equity, our GP, and we had to give him a percentage of the acquisition fee to just lend his resume to the deal. And he did, but he looked at our numbers and said, hey, I think you really got to up this and you got to change this. And then the lender said, great, he's got the right experience, but you guys together don't have the net worth to be able to do this. So then we had to go find another guy, and we gave him a percentage of the equity and a percentage of the acquisition fee. And that's something I would tell anybody listening today is it's okay to get help. Everybody has to start somewhere, and it's really hard to do it on your own. Few lenders will lend you the money if you haven't, even if you have the net worth. Our lender said, even if you have the net worth, you had to have a guy that had managed, or owned at least 1,000 units. But we're only buying 36. And they said, go find a guy that has 1,000 units. And so we did that. So we're happy to help other people. If somebody wants to kind of be a junior person on one of our deals, we typically take one new person every deal we do now to help them through the process and help us through the process.
Are those things that you just kind of figured out? Like, you're trying to, you find a property, you're doing all this work, and then you realize like, hey, the bank's not going to give me the money because I don't have the experience. And now they're not going to give me the money when I have the guy that has the experience, because now, we don't have enough money. Were those all things that you just kind of figured out, or was someone, guiding you along that process as well?
No, we just were told the blunt truths one day. Hey, this is awesome. We appreciate you applying with us for this loan, but we can't give it to you unless you do this and this. Right. It was just a nice slap on the face. And I think, people said it. We just didn't pay attention maybe at that point of in the workshop, because you're getting overwhelmed in these 3-day workshops. And sure, they probably said it. We probably didn't take it for granted.
We had people in the wings that we could bring in and did bring in to be able to help us get the deal done. But you always hit bumps in the road, and you just need to be prepared to pivot and turn and be flexible. And where there's a will, there's a way. You can figure it out.
So you find this deal, you're trying to, get this loan from the bank, you're running into these obstacles, and now you're going back to your network, which you've built up through going to these conferences, or with these people that you met like at the conferences that you were sponsoring with your accounting group?
Oh, look, your investors can come from everywhere, right? Or your partners can come from all walks of life. Some of the people that have invested with us, one, one guy, he was a dad to his son. Well, my son, our kids played on the same flag football team and the same baseball team, and I just happened to add him to my list. And when we were sending out a flyer, he said, "Yeah, I'd like to write you a check and be an investor in your deal." Kevin can share. We've got lots of stories like that. Another guy, I was chaperoning a youth weekend at a retreat in a place called Warm Springs outside of Vegas. And one of the other guys there and I were chatting when it was kind of lunchtime. And he said, "Well, what are you doing now, Mike?" And I said, "I'm doing this, this, this." And he said, "Oh, show me your next deal. I'd love to see it."
So we started out primarily with friends and family, but then we've grown with additional investors through the conferences that we've attended, the real estate conferences around the country. And you meet people who, invest on a daily basis, and it's what they do for a living. And so, I think the best place for starters is with friends and family, but eventually you're going to grow out of that and you're going to need to go into some family offices or some institutional money or others that are professionals in the real estate industry.
One of the bigger investors in our deals, it was a guy who at first we thought was a competitor. He had a property across the street, right? And Kevin, you ran into him and told him what we're doing. And I think, like us, a lot of people have this abundance mentality. "Oh, you got that at a good deal. I'll go in with you guys." That type of thing.
With that first deal where you had to raise the capital, you said you had to raise around 800,000. Was that something that you felt like was going to be easy, or was it a lot more challenging than you thought it was going to be? How was that first raise for you?
We knew it would be challenging. I would say in some ways it was a little easier than I anticipated. And in some ways, it was a little bit more difficult than we anticipated. Generally, but if you've got a good deal and the numbers look right, it's all a matter of speaking out and talking to individuals that are looking, that are either high wealth or are interested in investing. And if you put your deal in front of enough people, you'll be able to raise those funds.
So, your network at the time. So you had this deal. You're trying to raise the capital. Were you like pitching, or were you talking and presenting this deal to other people that were just starting off, or other operators? How did you find the right people that were looking to invest as opposed to just try to do it themselves?
Part of it is, we had 3 or 4 different avenues that we went. One, friends and family. "Hey, sis, I'm doing this. What do you think?" And she said no, and then Kevin talked to his brother. "Hey, brother, I'm doing this." And he said, "Okay, sure, I'll do it," that type of thing. But then one of the things I believe in, you should build your list and do it in a spreadsheet and then you need to mail it out, because an email can go to a lot more people. And, we did an email probably to, I don't know, 800 people, I think, the first time that we both had. We basically downloaded our Outlook note contacts into a thing, uploaded it into MailChimp or whatever software you want, and wrote a sales letter that was kind of non-salesy, but these were all people that we knew, right? And just saying, "Hey, if you're interested in investing in real estate, here's the benefits. Here's the project we're doing. Call us. And if you want to be off the list and not have us send it to you again, just reply, 'Take me off your list.'" And we did that. And, I can think of a couple guys that totally surprised me that said, "Yeah." And then the people that were at the seminar, we grabbed as many cards as we could from people at the seminar. And from one of the seminars we went to, we probably got 3 different investors that, guys that wrote 50,000, 50,000, maybe 25,000. So we got 125,000 from those guys. It was an easy sell. We said, "Here's the 4 numbers that we care about. Here's the return." And they said, "Okay." And one said, And because we were all kind of learning, they said, can we have part of your sweat equity in the deal? And on different deals, we gave each of them some of the sweat equity. Actually, not each of them, but all the others were willing to work. The one guy that we didn't probably just said, no, here's my $50,000 and move on your way.
And when you say that other people were saying, okay, can I have some of your sweat equity? When you say that, what do you mean? Like them being co-GPs or? Okay. And why are they specifically saying, hey, I want to be a co-GP on this? Is it because they're trying to build up their portfolio or?
The lenders want to know how many deals are you the GP on? Right. And so people have helped us. We thought we'd help them. We're thinking, what goes around comes around is kind of one of our joint philosophies in life, and try and give more than you take out of the world. And so we said, sure. And we said, so we've now developed kind of a little spreadsheet. We give X% for sourcing the deal, X% for finding the money, X% for asset management, X% for being the loan guarantor, X% for being the key person. And there's probably one other thing. And that adds up to 100% of the 30%. And so we just show them, here's the sheet. This is the max that we'll value you doing this part of it, and off we go.
And so, you had this email list, you sent out that email from all of the contacts, all the friends and family that you knew. How did that result? Was it just like phenomenal success and everybody, was replying and wanted to know more, or was it just crickets after you send out the email?
No, we had a good response.
We had low expectations and good response.
Yeah. So, you don't just send out an email and it all magically happens. You have to follow up, and you have to, follow up with phone calls and call people and talk to people. But, there certainly was, a good initial response of people that said, yeah, I might be interested. And we talked to those people and we shared with them what we were doing. And, some of them we invested with us, some of them didn't invest with us.
Right. Out of 800, Kevin, would you say we had 6 or 10 responses like that?
Probably a little bit more than that. And then probably had, probably 50% to 60% that invested with us after we sat down and shared with them what we were doing.
So out of around 800, friends and family, personal contacts, probably around 5 of them ended up investing with you guys?
Yeah, it'd be more than that. It's probably about.
On the first deal, though, how many was it? It wasn't 6 or 10 the first deal, right? We had 13 investors.
I think there's about 14 investors in our first deal.
And most of them came through one guy, and yeah.
And when you say came through one guy, this was from another co-GP on the deal?
Yeah.
So the way that you're positioning it is that when you co-GP with someone, they're expected to help you raise capital at that point?
Well, they come in and they help with, reviewing the underwriting, looking at various different aspects. They help with asset management. And because of that, we're willing to give them a share of the GP.
It's not just fundraising, but fundraising is always part of it, because all of us have to fundraise.
So when you're looking at your what you're able to allocate towards other co-GPs and sponsors, you say you take around 30% of what you guys would be splitting, and that goes to other people that will be partnering with you?
Again, it's not a set percentage. It's based on a variety of different duties and responsibilities. So every GP that comes in has specific responsibilities to help in managing the property and in managing the asset.
Right. So we've given as little as 2.5% of the 30% of our sweat equity, and as much as 50% of the GP.
And when we structure a deal, we generally structure it so that the limited partners come in with 70% ownership, and then we take 30% of that for our sweat equity, for finding, sourcing, putting the deal together, getting the financing, getting the funding, raising the equity, et cetera, et cetera.
So with that first deal, how was that toward completing it? Was it something that was just like, man, this was a lot more challenging than I thought it was going to be, or did it kind of or was it something that was you were just ready to take on another deal after that? Did you have to have a cool down period after that first one?
No, actually, we charged right into the second one. So
We were excited.
it went very well. You're always, when you're raising funds, you're always concerned to make sure that you can raise the equity and the debt prior to the close date. But again, if you've got a good deal and the numbers make sense, that, for at least in our situation, that has always come together for us to be able to get a deal closed. And we were excited after the first one, and we moved right into the second one. Closed our first one in July, closed our second one in October. So.
Right. I want to say, though, it's kind of like a woman who gets pregnant. The pain at the end is excruciating, right? And it's quickly forgotten. And 2 weeks later, it's like, this is awesome. I think maybe that's not a good analogy. Kevin's looking at me like, what on earth? But I mean, we were scared at different points of the process. We got scared, right? It was challenging. We didn't know all kinds of things that we probably should have known. We didn't, but we did it. And I think that's the key to success for anybody in this business, is just do the process. Do the process that are in, a half a dozen good books on the subject. Do the process from the workshops. Do it. And, those things teach about 70%, or your mind will only take in about 70%. And then the only way you get the other 30% is going through the process. And it was painful. It was scary. And the moment that we closed and we got the acquisition fee and we said, we're owners, we were like, let's do another one.
I mean, you went through all this struggle, this a lot of overcoming these obstacles, learning, just all of this information in such a short period. Did you think that that it was going to be even possible for you to be able to raise the funds again for another similar or even larger deal after you maybe felt that you had exhausted your efforts with that first deal?
Our resources and the folks that invested with us, we have many that have invested with us in every single deal that we've done. And we appreciate their loyalty, and we appreciate the fact that they have trust in us and they're willing to do that. So, I can say that, sure, it was nerve-wracking, and you're concerned if you're going to get everything and pull it all together before the close date. But we did, and we were excited about it, and we felt we did it once, we can do it again. And then we've done it again, and now we're doing it again and again. So,
and several of our investors have said they're coming in to the next deal.
Every deal is a step of faith, but if you build your connections and continue to expand to new people, and particularly attend the real estate conferences, and continue to build your network, as long as you've got a good deal, you should be able to raise the funds for it.
It sounds like you guys have really built this off of relationships, partnerships with these mentors, these people in the space. Have those all just come from these conferences that you've been attending? In a time like right now where everything is virtual, not a lot of in-person interactions, do you think that it's more challenging now for people to get started and build those relationships if they don't have any of that experience or that network?
I think the conferences are helpful, absolutely. But a lot of the relationships that have helped us, there's just different people in all walks of life. All of us should know, a good 120 or more people. And out of that 120, there's probably 5 to 15 that could be helpful in this endeavor. And the one thing that's good about Kevin that I really like and good about, that I think we're both good at is, we get told no sometimes 20 times in a row. And we just keep dialing for dollars. Hey, Dr. So and so, do you have a minute for me to talk to you about something? Not at all. And you just keep trying. Just keep talking. Don't give up. And then be willing to share. One of the things, like on the last deal that we just did, our partners basically, even though we sourced the deal, we had been working the deal for over a year. The seller didn't want to sell to us right away. I knew the property manager. We had done all the due diligence 2 or 3 times over the last year. And we brought somebody that's really strong into the deal. But he said, I want this share of the pie. And it was half the deal. And our job, what we said to each other was, we'd rather do a deal with somebody experienced like this and maybe make a little less than what we were planning, but have it get done and get over with and get booked. And let's do the next one.
Yeah, and mentors have been a huge thing for us. We've had mentors that steered us away from deals that had we gotten into, might have been challenging for us. And then, as Mike mentioned, we partnered with another company to take down this property, 258 units that we just closed last week. And they were just phenomenal and great folks to work with, great advice, and just really, really helped steer us along the right path. So mentoring and finding the right folks that can help you and are willing to work with you is absolutely key.
So be willing to take a little less maybe to get a deal done is another piece of advice that I'd tell you to do.
About how much, you, like you said, you put in all of that work, you're putting in the time, everything. And then this person comes in, and they maybe just have more experience. How can you, like, how long or how much thought are you putting into whether you should just, give up that, portion of the deal versus just, moving forward, or, maybe finding somebody else that might be, where you can get more from that yourself?
I think one of the things you need to understand is just don't be greedy in this industry. There's lots of deals and there's lots of opportunities. And we expect on every single deal that we do to bring in a partner, to bring someone in with us on the GP side, to help us accomplish our goals and help them accomplish their goals. So we're willing to work with folks. And I just think if we share and all work together, the pie is going to be bigger and greater than if we just try to hoard it all to ourselves. We're going to do fewer deals, and in the end, it isn't going to be as profitable and beneficial for us as if we, open up our sites and include and invite other people and be willing to share and move forward that way.
Yeah, I amen to that. I think Kevin and I, after the guy proposed what he did, we had a discussion, probably 15 minutes. And it was like, yeah, we're going to do that deal. Right? Don't be greedy. Everything Kevin just said is kind of our core philosophy in our firm.
And you guys have been scaling up pretty rapidly in the past couple of years now. Now that you acquire these properties, having to actually control the assets, do the development on them. Meanwhile, while you're, trying to find new deals, raising the capital, have you, with the properties that you have acquired now, have you started to, learn new things about, things started arising that made it challenging for your previous investors or for your current endeavors with moving forward?
Well, sure. There's been challenges, and one of the things when you go to the seminars and you attend those workshops, it's all focused on acquiring the asset. There's not a lot of discussion about managing the asset, they always make it seem that it's just managing the asset is very simple and easy. Well, we've learned that that's not the case. There's a lot of work,
even with a property manager.
Yeah. So the key is get an excellent property manager that can manage it, and then you manage the property manager. But certainly there have been challenges, especially the current landscape with COVID, We're in the state of Nevada. There was an eviction moratorium. That eviction moratorium was supposed to end on the 31st of July. At 5 o'clock on the 31st, the governor stated that, he was going to do an extension. And so there was another extension that went into effect, and it wasn't until October 15th that eviction moratorium ended. So, we've had people in our properties who haven't paid any rent since the beginning of COVID. And some of them have lost their jobs, and we certainly want to work with those people, and we don't want to put anybody out on the street. We want to work with everybody and work out a payment plan. But some of those individuals have avoided us. Some of them have bought new cars and bought new furniture, and they're just taking advantage of the situation. And for those that are doing that, those are the ones that, now that the eviction moratorium is over, we're working to get those folks out of the property and get units turned and get them released. If people will work with us and set up a payment program, we want to keep them in place. We don't want to put anybody out on the street. We want them to have a good, safe place to be able to live. But if they're going to ignore us and take advantage of the situation, then those are the folks we need to evict from the property and get new tenants, better tenants in.
If there's one other thing I could add is, when I came into this, I thought I knew half the business. After doing my first deal, I thought, well, maybe I only know 40% of the business. After doing my fourth deal now, I'm thinking maybe I understand 25% of the business. I mean, there's so many things that you learn doing every transaction, and what to be freaked out about, what to be calm about, that type of, those types of things. Just go into it that the guys that I see succeed the most, they seem to be curious, always wanting to learn, always open to new insights, going to the conferences, those types of things, versus those people that cocoon themselves in a certain area. So I'd say, just what you're doing, podcasts here. People ought to listen to podcasts. I found those very valuable.
I think when you first come into the business, you've got to be very humble. You've got to be very teachable. Because like Mike said, the more deals we do, the more we learn that we don't know everything there is to know. And so, be humble, be teachable, be pliable, be flexible. Those are all key points.
And do you feel that, did you have are you doing remodeling of these places, or are you doing value add stuff? Is it pretty light, or are you doing any major types of cosmetic work on these places?
So it's been a variety of both. The property we just purchased, the 250 units, the current owner has remodeled all but 33 of those and done just a beautiful, beautiful job on it. Where that property, where our opportunities came in on that property is that we knew we could, under professional management, could manage it better. It also had high occupancy since he had been turning all of the units. So we knew we could come in and through superior management, get those units leased up and drop the operating costs. Other properties that we've done, we've come in and have remodeled, 2/3 to all of the properties. So that's got to be managed, and that's a challenge as well. And we've learned that that's not always as easy as as it might sound, but we've managed to do it and do a good job of it. And like Mike said, the property that we purchased on October 28th. We've got it under contract now to sell about December 31st. Our investors will make about a 20% return on their money. That property we came in and remodeled about 4/5 of the units and did a great job on it. And our investors are going to reap the benefits because of that.
And you said that, do you guys have a lot of experience with doing remodels or property management, or was this all completely new to you and you're just depending on other people's skill sets?
It was mostly all completely new. Look, we've been involved in different parts of, the real estate business. But I don't think we're that different than the average person who used to be a banker or used to be a loan officer. You can come from done in different industries, and you've touched part of the property management industry in your past, but we really didn't have any significant experience in any of that.
So you just get the right people on your team that do have that experience. You find a great property management company, and they can help steer you to individuals that, the construction teams and the subcontractors that can help you do the build out. And so it's just, it's a matter of networking and connecting. We've got some great subcontractors that we've used that we'll continue to use again and again. We've had some that didn't pan out so well and that we won't use again. But, for the most part, we've had great folks and they've done a beautiful job on the remodels and we're happy. Our tenants are happy and our investors are happy.
Were there any unexpected things that came up, like with like a property manager? Did you have to find the property manager after you already had the property, or were these all like pieces that you were kind of preparing for prior to the acquisition of the unit?
So we had our property manager lined up prior to the acquisition that we knew we wanted to go with. So we had that lined up prior to making the acquisition.
Okay. And what mistakes? I mean, you guys have just been doing a real awesome job since only starting about it a couple of years now. What mistakes do you see a lot of new people that are coming into the space, or maybe people that were in a lot of those same workshops that you were in that haven't had the same success that you guys have had?
The biggest thing, the main workshop that we went to in Vegas, Kevin, how many people were there? 60, 80?
Probably about that much, yeah.
Yeah.
Of those people that were there, a lot of them didn't take the leap of faith, or my guess is that a lot of them didn't take the leap of faith and actually act and do something. And that's the key. I mean, it's not just going to seminar after seminar after seminar. It's actually being willing to pull the trigger and take that leap of faith and get a property under contract and go find the investors and find the debt. And you just got to follow through and you've got to act. So that's key. If you just go to seminars and then don't do anything, your life in this business is going to be very short-lived.
I don't know if I can, let me see if I can share this on my screen here. When we first started, can you see this?
Yep.
We wrote this on a whiteboard or a white Post-it. This was our very first meeting. Our 90-day goal, one property in escrow, right? By the end of the first month, have one, send one offer out. By the end of our second month, send 2 per week out. By the end of our third month, continue doing 2 per week. We wanted 2 broker meetings per week, 8 in Vegas and 5 in other markets. And then we wanted to underwrite this many deals by these dates, right? So you get a feel for, and we felt if we had good process and our goals were process oriented more than they were close the deal oriented, right? It's everybody sets a goal to win a game. Let's say if you're playing baseball or football or whatever, every team's goal is to win, right? Every team's goal is to make it to the championship, but only one does. And that's typically the process oriented, right? How hard do you work? That type of thing. And that's ours. Our belief is good process yields good outcome. So we've set process goals the whole time. And I think meeting brokers, sending out offers, doing this amount of underwriting every week, every month is, I think, the key. Out of the 60 or 80 that were in our workshop, there's probably 2 that bought properties. Our group and maybe one other. And, now once we got into that group, now we're comparing ourselves against our national cohort in RE Mentor. And, we think we're probably in the top 5 of the guys that just got in the business in 2019, in the first half of 2019. Right. And so we're at 358 units, and we hope to be a year from now, at maybe 750 to 1,000 units. But our next goal, we both talked about it, is getting to that 500 units by February 20th of next year. And I think we're well on our way to do that.
And it's all from just focusing on the system as opposed to the outcome.
Yeah. Yeah. It's just like people set goals to lose weight. If you just set the goal as the weight, that generally never works. But if you set the goal, I'm going to go to the gym 4 times a week. I'm going to count my calories 6 days a week and make sure they're less than this many calories. If you focus on those 2 processes and just keep track of your success, you achieve it a lot more.
What would you do differently if you did have to start from scratch?
Oh, a gazillion things. I don't know. Kevin?
No, I think we've done pretty well, but there's certainly things that you would learn. I think more experience in construction, more experience in asset management. I mean, those things we learn as we go, but learning, and developing some of that prior is important and good.
Managing the property manager is probably the thing where we could have done differently, where we've now, because have properties in different regions, we've kind of gone through 4 different we either have currently or had, we've experienced 4 different property management firms, and it's amazing how different everyone is, isn't it, Kevin?
Yeah, they are.
And they all have their strengths and weaknesses, and you've got to help them, coach them through their weaknesses, right? We know what our goals are. We think every management company should do the same thing in an excellent way. And every one of them does probably 6 or 8 things in an excellent way, 2 or 3 things in an okay way, and 1 or 2 things that we want to strangle them with on a semi-regular basis.
And what question would you have for someone that is maybe at a similar size than you, or maybe at the next level where you're trying to go? What questions do you have in your business that you would be asking for them?
Part of it for me is a little bit the discipline. I think now what Kevin and I seem to talk about every week is we now have a lot of good opportunity. And then we keep having deadlines that conflict because there's a lot of good deals and opportunities. And just how do you manage some of that where we don't have an office yet. We've been working out of our separate homes, and I still have a day job. And, so we don't have enough time in the day to do everything that we want when we want to get it done by. I probably missed 3 deadlines that Kevin sent for me in the last week. And we just have a lot of good deals, and what discipline should we do in kind of sorting certain things out?
Our pipeline is full with some excellent deals, and to be honest, our bandwidth is getting a little bit stretched. So now we're looking at when is the right time to bring on additional staff, when is the right time to get additional help, and we've got some really good people. We're outsourcing some things too. We now outsource our underwriting, and so we're experiencing some of those growing pains. So somebody that's at the same position that we are, or a step ahead of us, that's kind of some of the things that we would be looking for advice from them. Is how do we take this next step to take advantage of the great deals we have in the pipeline, and make sure that we still have good balance in our lives. We're not working 12 hours a day, but we still have time to be with our family and our hobbies and other things. So,
right. So I've got a number of clients that are around the 1,500 to 2,000 units, and they have firms, right? Where, one guy has 2,200 units, and he's probably got 6 people in his company. It's kind of that transition. When do we pull the trigger? When do we get the office space? When do we put somebody else? It'd be awesome for us to have an office manager or an administrative assistant to help us with, because we're doing some mundane stuff that doesn't take someone with a third of the education that we have, that just takes time. Some stuff just takes time, and so it's about building a firm and building, so our vision is, we'll probably in the next 6 months have an office and have some staff to help help us do that so that we can absorb more. But part of it is we got to keep, closing a deal, getting an acquisition fee, getting income stream, refinancing properties so that we get better cash flow on the property. That there's a number of things that go into that, and just when to pull the trigger and that type of thing.
You guys just don't want to retire. You don't want to relax, quit working. How much more?
358 units. You can't retire on 358 units.
Right. But I mean, you guys are working real hard. You said Kevin, you're working, 12 hours plus, and you got a family. Is all of this.
We don't work that long every single day, but some days we do. But I think for Mike and I, we're both kind of at the end of our career. This is our last hurrah, and we want to build something value for ourselves and for our families. And we're off to a great start, and things are going very well for us.
Do you guys have like an end goal in mind, or a stop point or number that you're trying to reach?
So we've talked, and our goals are we'd like to get to the 5,000 to 7,000 door range. And we think we can accomplish that in another, 4 to 5 years. Once we begin to grow and put our some of the foundation pieces in place that we've been talking about with bringing on additional people. So that's kind of where we think we can wind up. And at that point in time, I think we'll be satisfied, and we'll say, okay, we're ready to turn this over to the second generation in the company. We want to bring on good leaders and great folks that can carry the company on after we decide to step back in the background a bit.
I think I know that both of our goals are to include family members into the business. Kevin and I both wish we'd have learned more about this 30 years ago.
Oh, absolutely.
And so we've both talked to our kids. I think we both have a couple kids that are kind of intrigued by getting into the real estate business. And, as I look at, my kids and my neighbor, there's first generation wealth typically raises humble kids that, most of the kids grew up before the dads really got, the families really got wealthy. But it's this, we're earning our own way here. And I think we're going to teach our kids how to be in this business. And I'd be shocked if 2 of Kevin's kids aren't in this business in 5 years and 2 of my kids aren't in this business in 5 years. And we're looking forward to that. And then, we're, both of us are service minded. I think we both plan on going on service missions, taking a year or 2 off, sabbatical to do service in different parts of the world. And that's our goal.
That's awesome. And what's the best way if anybody wants to be able to reach out to you, if they are interested in partnering or finding out more about you and your company? How can they connect?
Listen to this podcast. No. But our website is CaminoVerdeGroup.com. And, you can learn about kind of the different projects we're doing.
There's a link there to our portfolio, so you can see the different projects that we're involved in. And I certainly would be delighted to take emails from anybody who might have questions or want to contact us. My email is kevin@CaminoVerdeGroup.com. So check out our website, send me an email. We'd be delighted to visit with you and talk to you.
Awesome. Well, Mike, Kevin, I appreciate you so much for coming on to the show. And until next time, deal makers, talk to you later.
Julian, thanks for the opportunity. We appreciate it.
Yeah, thank you very much.
Okay. Bye-bye.
Hope you all enjoyed this episode. If you did, please go on over to iTunes and leave us a review, as that greatly supports the show. And if you'd like to be able to connect with John, the community, and I, then come and join us on our Facebook group, the Multifamily Success Network, where you can connect and make deals with other multifamily investors. Go to multifsuccess.com/community.